Welcome to your real estate market update. It is hard to believe we are already more than halfway through September. If you're here locally, I hope you've enjoyed some of the cooler weather. This is actually my favorite time of year in the Triangle. There's a lot to talk about today with regard to real estate, what's going on nationally, what's going on with the media. They're talking about a recession, what you should know about that. So we have a lot to cover today. The Feds just reduced rates yesterday. So a lot of information available for local markets and then also on a national level. So I'm going to share my screen and we will get right into it. And we're going to start with a high level overview of the entire Triangle region. What is going on year to date? Where are we at? And so we'll look at the entire Triangle region year to date. This box over here. New listings are up over 14% for the year. That is great news for you if you are a buyer in the market or you're thinking about purchasing a home. There are more homes available for sale than there have been in the years past. Sales are up 4.3% compared to last year. They were up 3.1% for August. And a lot of folks are thinking that because the market's a little bit slower, homes are taking a little bit longer to sell. We have more inventory available that we're seeing prices or home price appreciation or home prices come down. That's not necessarily the case. So if we look at the median sales price and the average sales price, you can see for the year, the median sales price was flat versus last year, and the average sales price was up 0.5%, so just shy of $488,000. It actually grew, both those numbers grew in August, 2.2% for the median and 3.5% for the average sales price. So home price appreciation is still positive in this area or flat versus last year in this area. What I'm seeing more of is listings are staying on the market longer and we're seeing more price reduction. So we're going through a little bit of a market correction and home list prices are being adjusted. So you can see that demonstrated in these two percentages here. So this first percent, 96.9%, this is saying that a seller got almost 97% of their original list price when that listing finally closed. The second percentage, so they're coming off their original list about 3%. The second percentage is whatever percent they received of the last list price. So if you were listed for $500,000, you're reduced to $475,000. You sold for $470,000, for example. That's what this percentage represents. So what percent a seller is getting of that last list price and coming off that last list price another percent. So we're seeing list prices come down, not necessarily home prices. And I'll show you this as well. One of the reasons I think there are, it's great news. We heard, yesterday, all the news, all this is the top story. The Federal Reserve reduced interest rates by a quarter point yesterday. So a lot of news on that. And, a lot of folks think that that's going to impact mortgage rates. Well, what the Federal Reserve does doesn't affect mortgage rates. It influences rates, but it doesn't necessarily affect rates. So before the Federal Reserve reduced rates, the 30-year fixed was around 6.13%. And today, that percentage actually ticked up to 6.35. So why are mortgage rates, that was the news today, why are mortgage rates actually going up after the Federal Reserve has cut the interest rates? And it may seem like a counterintuitive trend, but the jump in mortgage rates was relatively small and driven by how financial markets are assessing the central bank's next move. So if you're a buyer in this market and you're waiting for a specific mortgage rate and you're trying to time the market based on mortgage rates, it's definitely a risk. You're gambling because as rates come down, more buyers are going to qualify and more buyers are going to enter the market. And yes, we have more inventory available, which I'll show you over here. We do have more inventory available for sale than we have in years past, but not a ton. So yes, the market is softening. It is shifting over to more of a buyer favorable market, but a meaningful drop in interest rates could really change things. So when we look at the entire Triangle MLS, Raleigh, Cary, Durham, and what their month supply of inventory or homes available for sale, what that month supply is, we're around 3 to 3.5 months supply of homes available for sale in August. And that's up in every single area when compared to last year. So again, great news if you're a buyer, there's more homes available. A meaningful drop in rates can bring more buyers into the market, and it won't take much for this inventory to be bought up and that inventory to drop again to very low levels and shift back to a seller's market. Now, I'm not saying that that's necessarily what's going to happen, but if you're trying to time the market, that's what you run the risk of. because we at a 3 and a 3.5 month supply, that's still a low inventory of homes. A normal and balanced market is about a 6 month supply. So just something to be aware of if you're a buyer in the market today and you're thinking about getting in the market, you want to wait for rates. Now is a buying opportunity because rates are higher, homes are staying on the market longer. You have more options available to you. You can ask your questions, go back and see the home a second time. You can do some of your investigation before you go under contract on a home. You can negotiate the price lower, as we saw in the previous, as we saw what's happened in the triangle. Sellers have come off their original list price about 3%, off their last list price over 1%. So you can negotiate the price down a little bit. You might be able to negotiate money in lieu of repairs or getting some repairs done. So that's why I say if you're a buyer in the market or you're thinking about getting in the market, now is a great time to make a move. And if you have questions on that, don't hesitate to reach out. I'm always happy to talk through things, but I actually just talked to somebody the other day who asked if it was a good time to purchase or what was going on in the real estate market. And yes, while we are seeing it go towards a more favorable or more normal and balanced market, we're just getting back to pre-pandemic levels, which pre-pandemic, 2018 through 2019, those were the last normal years in real estate. And so normalizing is homes, some homes sit on the market and have price reductions. Some homes come on the market and they sell right away. Some homes come on the market and they get more than one offer. Some areas are doing better than others. So these are all factors that are impacting the real estate market and making it become a more normal real estate market. And I think when some of these indicators get out in the media, it's like it causes a panic and people think everything is crashing, and it's not necessarily. I mean, you can see in the numbers what's gone on with the average sales price and the median sales price on a monthly basis and what's going on a yearly basis. So I wanted to also talk a little bit about, and I'm not on the right page here, a little bit about, national information, what's going on in the news media. So there's talks of a recession. So I'll start with a quote: the risks are increasingly high that we're going into a recession. We're not there yet. Maybe this thing gets turned around, but that's increasingly becoming hard to do with each passing week. So this is the chief economist of Moody's. And why is this important? Because when you hear about a recession in the news, that gets people questioning and wondering what's going on. And that gets them to a position where they may be questioning any financial moves that they're going to make. But why do we think we're going into a recession? Well, one, our inflation is still above that Federal Reserve target rate of 2%, and it did tick up in the last month or so. Two, unemployment has held steady, but job growth is stalling out. So you can see what's happened over the last couple months. And this is one of the reasons the Fed's cut the rates. It's because of the job growth was stalling out and what's going on in the labor market. So those factors are kind of pointing us towards maybe we're going towards a recession. And why is this important for you? If you're thinking about buying or selling a home, Lending Tree did a survey and said nearly 2 in 3 Americans think a recession is coming, and 74% of Americans admit that world news and or current events affect their financial decisions. Obviously, this includes buying or selling a home. So just something to be aware of if you're in the market, you're on the market, you're looking for a home now. These are just things to be aware of. Another quote: today's mortgage rates have already anticipated the September Fed rate cut priced in. So we talked a little bit about that earlier, that once the Feds cut the rates, well, rates jumped up to 6.3. So a lot of times the cut is built in really when it was really built in, and we saw it drop initially when the jobs report was released. So you could see it was up closer to 6.75. And then after the job reports released and there was talk of the Federal Reserve cutting the rates, that's when we saw the mortgage rates drop. Now the Federal Reserve has cut rates and we've seen them jump back up. And I think this shows you that, trying to time the market is incredibly difficult and very risky. It's just like if you're trying to time the stock market, and you're trying to, obviously, we all want to buy low and sell high, right? But it's incredibly difficult to try to do that. And so, when you're looking at mortgage rates, and I think, looking long term, think about how long you want to live in a home. If you're buying a home and you're thinking in a year or two, I'm going to sell it and I want to make a great profit, this may not be the best time for you. But if you're looking to make a move and you're like, hey, this is my home for the next 5 years, the next 7 years, the next 10 years, it's a good time to make a move. And again, I do think there is a buying opportunity in the market today. Home price growth is the slowest since summer of 2023, and this chart shows the percent change in sales price year over year. And you can see we've been trending down since basically December of last year, January of this year, trending down. And that's not a bad thing. I think when people start talking about home price growth slowing, people automatically think that that means prices are coming down and it's crashing, and it's not. We're just going to more healthy home price appreciation. And if you look at all the experts who project what's going to happen with home prices in the future or this year, almost all of them are projecting an increase, a small increase. And if you average out all those experts, you come up with a percentage of around 2 to 3% increase in home price appreciation. I think there's one or two. I know Zillow was one that they dropped their forecast to actually home prices declining this year. But the majority of other experts are still saying we're going to see an increase. It's just going to be a smaller one. That's not a bad thing. One, home price appreciation, the growth slowing and staying positive is a good thing. We're coming back to a healthier market. Think about when we were in the pandemic, home prices increased 54%. So that's not something that you can sustain. So seeing it come back to a normal 2 to 3%, 1 to 3%, that is a healthy and balanced market. And this is another indicator that shows we are going back towards a more normal and balanced market. The housing market has cooled modestly in 2025. We've talked about that, but the extent and persistence of rebalancing really varies across the country. Regionally, home buyers and sellers are likely to experience a very different market. And that is so true today. What does that mean here? So changes in home price growth vary by region. We are here in that South Atlantic region. You can see our home price growth is 1.26% for that entire region. And then you can see what has happened across the country and where the growth is really taking place: East, South, Central, East, North, Central, Mid-Atlantic, New England. That's where, and I have friends in these parts of the country, and they're posting how fast homes are selling and that they got multiple offers and things like that. This shows how different it is on a regional level. Overall, national home prices, and this is through second quarter of 2025, home prices were up almost 3%. So still a positive trajectory being forecasted or that's occurring now and being forecasted for the future. So if we do go into a downturn or a slowdown or a recession, what does that mean to you? And I think if anybody who's in the stock market knows that when you see a downturn, it always comes back. You usually end up making everything back and then some when the market does come back. So when we look at what's happened over the years, the decades of downturn, so timeline of the major slowdowns in the housing market, and I think when people think recession or a slowdown, they automatically think of the great financial crisis in 2008. We are not in that same situation. Lending standards have remained strict. We don't have a ridiculous supply of inventory available for sale. Foreclosures are historically low. So we're not in that same situation that we were at that time. It was kind of like a perfect storm at that time that really caused everything to implode and to see home prices drop so significantly. These other ones, yes, we saw home prices maybe go down or flatten out. However, in all of the last 5 recessions, we've seen mortgage rates come down, and in I think all but 2, home prices actually went up during those downturns. So when you look at the decades of downturn, the early 1980s, the great financial crisis, 2020, where it was COVID, and now we're in 2022 to 2025, that present slowdown because of the higher rates. We're expecting a downturn again. But when you look at what has happened over the last 50 years, and these arrows mark those key events, what's happened with the median home price after each one, it has gone up significantly. So very similar to what you see in the stock market if you invest, what happens when you see a downturn, very similar to what happens in real estate. And despite all of that and everything that's going on in the negative news, talk of recession, all that stuff, U.S. home price expectations. So Fannie Mae Home Price Index, this is from Fannie Mae. And I focus on the most pessimistic, what are the most pessimistic experts saying about what is going to happen with home price appreciation. And that is the orange line, and they are still projecting an increase over the next several years. So if you're thinking about purchasing today and you're thinking, I'm going to live there 3 years, 5 years, 7 years, 10 years, based on what experts saying, even the most pessimistic are saying that home prices are still going to increase. So hopefully that information is helpful for you. A lot of information today. If you have questions or you want more information and you're here locally in the Triangle, don't hesitate to reach out. If you're thinking about buying or selling, I still think it's a great time to sell. You just have more competition on the market, and we are going into a slower time of year as we get into the fall. But I, am still willing and would want to have that conversation. It can be a good time for you to be getting your home ready for sale. It could still be a good time for you to be on the market because at that time you may have less competition. So if you have questions on buying or selling, you want more information like this, don't hesitate to reach out. You can also check out my YouTube channel, Welcome to Raleigh. There's more information like this: buyer tips, seller tips, city tours, community tours. It's a great resource. Check it out, and I look forward to talking to you again soon.